Hi traders, you are welcome back to the Forex Geek channel. Most traders follow the crowd, but what if I told you that going against the majority can give you a real trading edge? Now, it might sound weird, but that's exactly what the contrarian trading strategy is all about. So, in this video, I'm just going to show you how to identify extreme market conditions and trade against the herd for high probability setups. So just stay tuned, okay? Stay tuned as I reveal to you this unique trading strategy. All right, let us start by understanding what the contrarian trading strategy is. Okay, let's understand this concept first of all. Okay, um, I I'm just going to write it out here in case you know you want to. Okay, see it clearly. So this is the strategy we're going to be talking about in this video. Now, basically, this strategy involves taking positions against the prevailing market sentiment, right? That is what the strategy is about. So when markets reach extreme levels of greed or fear, they often reverse. So instead of following trends blindly, contrarian traders look for opportunities where the majority is likely wrong. Okay, so this is the concept behind this strategy. All right. Now, here is how you can apply this strategy. Let us just add a few indicators to the chart. I'm going to add the relative strength index and the Bollinger Bands to the chart right now. Okay. All right. So now, if you want to apply this strategy, you can use the RSI and the Bollinger Bands. If the RSI is above 70, for example, right? If the RSI is above 70, for example, it means that the market is overbought. If it is below 30, it means that the market is oversold, right? All right, okay. You check your Bollinger Bands. When the price touches the upper or the lower band and starts to reverse, it signals extreme conditions. Then you analyze market sentiment. If retail traders are overwhelmingly bullish or bearish, a contrarian move might be forming. Then you look for candlestick patterns. Reversal patterns like pin bars. If you find a pin bar or an engulfing, pin bars or engulfing candles, they confirm potential trade entries. So now let's just apply the contrarian trading strategy. Let's look for a valid example. Let's look for a valid scenario. All right. Okay. So now we can see that at this particular situation, we can see that volatility was quite high here, right? Volatility was quite high. You can see how price was steadily rising, piercing through the Bollinger Bands. Now, a lot of buyers might have been in the market at this point, including those who jumped in late, because of course there are some that might have entered here, some might have entered here, some might have even entered here, right? Now, the RSI entered the overbought territory. You can see that the RSI entered overbought territory somewhere around here, right? Okay, so the RSI had entered the overbought territory somewhere around here, although it was not severe. Let's just come around here where the level got more severe, right? Okay, now most traders might have been buying still even at this point, but the RSI had already started showing an overbought signal, and market sentiment perhaps would have confirmed extreme bullishness, right? So in that case, we can consider taking a contrarian short trade with a well-placed stop loss. Now, if you had entered your short trade, if you want to enter a short trade, you just wait for the RSI. Make sure that the RSI have entered the overbought territory properly. Okay. So once the RSI has entered overbought territory properly and starts looking to curve downwards, you quickly enter your short trade. So maybe entering our short trade might have been somewhere around here, right? When the RSI was looking to start curving downwards, right? So enter a short trade. Then you place your stop loss at a reasonable point away. All right. Do not use tight stop loss for this. All right. So you can place your stop loss over the Bollinger Bands. Okay. Over the Bollinger Band. You place your stop loss above the Bollinger Bands. Then you just wait for price to reverse. So that's just it, right? So once price has reversed and got into the lower Bollinger Band, because you can see that the price was already piercing through the upper band. So once you enter your sell, you set your stop loss above the BB, and then once the price gets to the lower BB, the lower Bollinger Band, that is the lower band, I mean, you can now exit. You can just exit your sell. Okay. So now this strategy has its benefits and its challenges, of course. The strategy comes with some advantages, including the fact that it identifies high probability reversal points, and then it helps traders avoid emotional decision making. And it works well in ranging and volatile markets. You can see whenever you have a volatile market, remember that price does not move in a straight line. And that is one of the things that assists this strategy, because if there is high volatility at a time and you notice something like this happen, most likely price will have to calm down, because price does not move in a straight line. It does not move in a straight line. So just ensure that you are trading major currency pairs, or maybe pairs that are more, will I say, zigzag friendly. All right. Yes, let me use the terminology. Let me use the term zigzag friendly. Okay, because there are some assets that sometimes it might look as if they move in a straight line, even though that, well, price does not exactly move in a straight line. But there are some assets, maybe like gold. Sometimes if you look at gold, it could give an impression as though it moves in a straight line. Then with minor, let's just quickly look at gold, right? Just to explain what I'm trying to say. Okay, it does not move in a straight line. I'm just trying to say that sometimes it could look that way. Okay, take this for example. Can you see? Are you not going to call this a straight line? Well, I'm just trying to point. I'm just trying to point out something. I'm just trying to point out something that if you want to make use of this strategy, just use an asset that is more zigzag friendly. That's what I'm talking about. You can see that sometimes assets like gold or maybe Nasdaq, all those stock indices, sometimes they give an impression as though they move in a straight line. Can you see? Can you see how? You can see it moved up. Well, it's actually came down a bit and then continued. Eventually, price do not move in a straight line. It's just that some assets usually, are better to use this strategy on compared to others. And if I'm going to give you a recommendation, I would suggest that you use currency pairs that are more zigzag friendly, maybe major currency pairs. You can just stay away from gold if you want to use this strategy, because sometimes you might be anticipating gold to have a significant pullback, but it might disappoint you, right? Another asset could be, stock indices. For example, let's just look at USA 100, for example. Okay, just trying to point out something, right? All right, you can see that. Can you see? Can you see what this asset, all the way from that point down here? This is the daily time frame, literally the daily time frame. Can you see? Can't you call this a straight line? Although there was, of course, significant volatility and all of that, right? Let's go to 1 hour time frame. Can you see? Can't you call this a straight line? So this is just what I'm trying to point out, that there are some assets that are more you know, zigzag friendly compared to others. Now let's get back to the GBP USD that we were talking about. Can you see? Do you want to compare what GBP USD is doing with gold and Nasdaq? Can you see that there are more zigzags on GBP USD? Can you see? This is literally an uptrend filled with zigzags, up, down, and so on and so forth, right? And even when the sell trend started, can you see? Down, up, right? Down, and so on. So it just looks as if the zigzags are more notable compared to the other assets that we looked at. Compared to this, can you see? Can you see the difference? You can see the contrast. Sometimes it might give you notable zigzags like what we have here. Some other times it might not. So to be on the safer side, I hope you get my point. To be on the safer side, just stick with an asset that is more zigzag friendly. Okay, I have talked about that over and over again. So let's just get back to what we have. Now let's look at the challenges with this strategy. One is timing. All right, one is timing. Timing is critical. Markets can remain overbought or oversold longer than expected. So that's one of the challenges. And then it requires patience. Waiting for confirmation signals is essential. So that is the reason why risk management and proper execution are key to success. And that is how you can apply the contrarian trading strategy. If this helps you see the markets differently, hit the like button, subscribe to the channel, and turn on notifications for more trading strategies. Let me know in the comments if you want me to cover another trading method. Thank you for watching, and I hope to see you in the next video. Happy trading.